For decades, the world's wealthiest and most powerful institutions, Harvard, Yale, Princeton, have been playing a different game. While the average person was told to simply buy stocks and bonds, these multi-billion-dollar endowment funds were quietly using a different, more powerful blueprint. They weren't just trying to beat the market, they were trying to build permanent, unshakable, generational wealth. For the last month, I have been reverse engineering their strategy. I've gone through the reports, the documents, and the data to deconstruct the Ivy League portfolio. And what I've found is a radical three-part formula that is completely different from what they tell the public to do. Today, I am giving you that institutional-grade blueprint. The core philosophy of the Ivy League model is one word: diversification. But not the simple diversification you've been taught. They believe that the public markets, stocks and bonds, are only one small piece of the puzzle. To build a true fortress, you must own a piece of everything. Part 1. The public engine, 40%. This is the part of the portfolio that looks familiar. It's a globally diversified mix of public stocks and bonds, very similar to the millionaire portfolio we've discussed before. It is the liquid, reliable engine of the portfolio. It is their foundation, but for them, it is only a small part of the story. Part 2. The real asset fortress, 30%. This is where the game changes. The Ivy League funds are massive owners of real, tangible assets. We're talking about huge portfolios of commercial real estate, office buildings in New York, apartment complexes in London. They also own vast tracts of natural resources, farmland, timberland, and energy pipelines. These are assets that generate real cash flow and are completely disconnected from the daily madness of the stock market. Part 3. The Private Equity Accelerator, 30%. This is the most secret and powerful part of their formula. These institutions are part owners of hundreds of private companies. They invest in businesses long before they go public. They buy startups. They fund new technologies. They own companies you've never even heard of. This is their high-growth accelerator. It is illiquid, it is long-term, and it is where they generate the explosive returns that have made them legends. Let's review the institutional blueprint. 40% in public stocks and bonds for liquidity, 30% in real, tangible assets for stability, and 30% in private equity for explosive growth. It is a three-part machine designed to survive any crash and thrive in any economy. Now, can you replicate this exactly? No. You don't have $1 billion to buy private companies, but you can learn the lesson. True wealth is built by diversifying beyond the public markets. You can own real estate. You can start your own small business. You can think like an institution. The secret of the Ivy League is that they don't just invest in the market. They own the entire economic machine. If you are ready to stop thinking like a retail investor and start thinking like an institution, subscribe to Quantum Fortunes. We provide the blueprints for empire builders.